Whoa, what a wild month it's been in March. Let's get to the numbers. All right, first, let's go over the purchases that we made in the month of March. There are a lot of them. So I bought mostly three different companies and a slight new position in one more. I bought Newt at 1948. A few days later, 1828. Literally a few days later, 1559. Literally a few days later, 1269. And then another one, 1269. Newt has been one of the companies that I've been looking at because of the high dividend yields, and it's been dropping like a rock. It has rebounded a bit. Today is March 31st, and right now it's at 1590. So a good amount of shares. I did buy a little lower than the current price, but that could easily go back down to 10 or less for all we know. Main Street Capital, 10 shares at 35.29. 6 shares at 32.31. And 10 shares at 16.88. Main right now is at 21.47, so it did shoot up a little bit. It did go down $2 a share yesterday, or 9%. So I'm considering buying more as dividends are coming in. I did make two new purchases, one for ARCC Capital, 20 shares at 27.87, 12 more shares at 17.12, and then just one share at 16. Right now, ARCC is at 10.64, so it's quite a bit lower than when I bought it at. And the reason why I bought these is that it's going to pay 40 cents a share dividend shortly. I've been looking at EPR for months now, and if I just show you the actual price of it, it is dropping like a fallen knife. EPR does own triple net lease in real estate for entertainment industry. It was literally at 70 about a month and 2 weeks ago, and now it's at 25. It's going to the 1 month falling knife here. The low was $12. So I started a position 24.14, only 8 shares, not a lot. Let's look at the total amount that I invested in March. Quite a bit. 193. I'll just do the dollars. 168. 90. 12. 16. 193. 311. 305. 357. 365. 77. 352. 93. That's $2,532. Now, most of that was from the tax return that we just received. We actually made about the same amount on the tax return. So we're a little bit lower on our emergency fund right now, but this is all money that we could easily take out tax-free because I put it all in the Roth IRA. So now 2532, I know the dividends might be all over the place, but let's say that it averages 6%. So these are higher than that, but I expect cuts in dividends. 6% would be $151.92 for the year, or $12.66 a month. So hopefully my dividend income will be at least $10 more a month. Maybe not in the short term, but in the fairly long term. So should be helping in my dividend prospects. These were the dividends that I received for the month. SHPD, 22.55. RYLD, which dropped like a rock, only 38.83. This was a bit disappointing because I thought it would have a bit higher payout since the market went down and they still covered calls, but unfortunately it didn't. Main Street Capital, 30.79. A lot of the shares that I bought will go into next month's dividends. So next month, Main should be at least $32, possibly even more. KBWI, 22.77. KBWI share price has been dropping like fallen knives you're trying to catch, but the dividends have actually increased quite a bit, and I haven't bought any new shares. Luckily, March was a quarterly dividend, and in the quarterlies, I'm going to get 18.32 for VNQ, 20.67 for VEA, ARCC, which I just started, 1322. Newt will be 6166. SLYV 6665. And DLS 2896. Let's get rid of Newt because it's a quarterly paying. But I've added the two new ARCCs quarterly. I added EPR, so I'm going to put EPR as a new column since EPR is a monthly dividend paying stock. So EPR, whenever I get the first dividend, I'll place here. No YouTube salary yet. Notes, I guess I could put tax return. Pretty much invested. Based on the stimulus package, we should be getting about, was it 1,200 times 2, 24, $3,400. I'm going to guess around the end of April. And probably about a third to a half of that will be invested. Now, comparing to last year made $155.89 in dividends. This year, we more than doubled the dividend payment. So this year, we're definitely on track to be making quite a bit more in dividends than last year, assuming some of the dividends will actually decrease from last year based on the current economic conditions. However, I think it's going to be very beneficial in the long run since I'm buying all these new shares. It's really about it for now. What I definitely agree is take a lot of this investing with a grain of salt. Be careful what you're buying in the short term, but also look for opportunities because they are out there. It's hard to know if it's going to keep dropping more or go up, but if you see reasonable valuations, definitely invest some of your money and just keep going with the same investing plan that you're doing at least. If you have more, then maybe a good time to do more, but definitely don't sell everything and just get rid of the whole market. Keep on going with your plan. If your plan was to invest, say, $200 a month, keep doing your $200 a month, okay? And if you have any general questions or thoughts, let me know, and I'll see you guys next time.